IRS Form 4797 is where you report the sale, exchange, or involuntary conversion of business property, including depreciable equipment, real estate used in a business, and certain capital assets. It works together with your main Form 1040 or business return. The gain or loss you calculate here flows to your Schedule D or directly to your income, depending on the type of property sold. At the top, enter your name exactly as it appears on your tax return and your taxpayer identification number. This ties the form to your specific return. Part 1 is for property held more than 1 year. Enter a description of the property you sold, then the dates you acquired it and sold it. Next, enter the gross sales price, your cost or other basis, any depreciation you have already taken, and the adjusted basis. The form calculates your gain or loss from these numbers. The gain reported on Part 1 flows into Part 3, which nets your gains and losses. Ordinary income recapture from depreciation is reported separately because it is taxed at ordinary rates, not capital gain rates. The net from Part 3 carries to your income tax return. If you had multiple property sales, list each one in the appropriate part. Keep all your closing documents, depreciation schedules, and purchase records as support. Your tax professional can help you allocate between ordinary and capital gain treatment. Fill yours out free at FormsPal.com. This is general information, not tax advice.